Combining RSI, MACD, and Bollinger Bands for precise binary options, Signals is one of the most powerful ways to improve accuracy, reduce false entries, and build confidence in your trading decisions because each of these three indicators contributes unique insights into market behavior, and when layered together, they create a framework that addresses momentum, trend direction, and volatility in a way no single tool can. The Relative Strength Index, RSI, is a momentum oscillator that moves between 0 and 100 and helps traders understand whether an asset is overbought or oversold. In binary options trading, this means spotting potential reversals before they occur, and traders typically look for readings above 70 to indicate an overbought condition or below 30 to suggest oversold conditions. But RSI on its own can generate misleading signals during strong trends, which is why adding the moving average convergence divergence, MACD, becomes so important. The MACD is a trend-following momentum indicator that compares the difference between two moving averages, often the 12-period and 26-period, and signals are generated when the MACD line crosses the signal line or when it diverges significantly from price action, which can hint at weakening momentum. In binary options, this helps confirm whether an RSI signal is worth acting on, because when RSI indicates overbought, yet MACD remains strongly bullish, it might not be the right moment to take a reversal trade. To complete the setup, Bollinger Bands, which consist of a moving average with upper and lower bands based on standard deviations, measure volatility and show when price is stretched away from its average or consolidating into tight ranges that often precede breakouts. Traders can use this to determine whether price action is rejecting or respecting these bands, with signals such as a bounce from the upper band confirming an overbought condition highlighted by RSI, or a breakout beyond a contracted Bollinger Band range supported by MACD momentum, suggesting a strong trending opportunity. By combining all three, traders filter out noise and focus only on high-probability setups. For example, if RSI is below 30 showing oversold conditions, MACD gives a bullish crossover, suggesting momentum is shifting upward, and price is touching or slightly breaking below the lower Bollinger Band. The probability of a bullish reversal trade becomes much stronger than if any one of those signals stood alone. Conversely, when RSI is above 70 showing overbought, MACD gives a bearish crossover, and price rejects at the upper Bollinger Band. Traders can enter a put option with more confidence. This synergy reduces the likelihood of being trapped by false signals that plague binary options traders who rely on a single indicator. Another layer of precision comes from learning how these indicators behave under different market conditions. During trending markets, RSI tends to remain in overbought or oversold zones for longer, and Bollinger Bands expand widely as volatility increases, making MACD confirmations more valuable. During consolidating or ranging markets, Bollinger Bands narrow, RSI oscillates more frequently, and MACD signals may appear weaker, meaning traders must be more selective in choosing signals to follow. Understanding these dynamics allows traders to adapt and avoid one of the most common mistakes, treating every signal as equal regardless of market context. Risk management is also enhanced when using this combination because traders can set more accurate entry and exit points. Instead of blindly entering on the first signal, they can wait for alignment among all three indicators, which naturally filters out bad trades and creates discipline. For example, instead of chasing every MACD crossover, traders can require RSI and Bollinger confirmation, which reduces overtrading and improves consistency. Binary options are especially sensitive to timing because trades expire quickly, and even a small delay in signal confirmation can be costly, so combining these tools ensures timing aligns with real market behavior. Beyond technical setups, using RSI, MACD, and Bollinger Bands together also trains traders to read charts more holistically, building a deeper understanding of market psychology. RSI reflects trader exhaustion, MACD reflects trend conviction, and Bollinger Bands reflect crowd volatility, so together they mirror the interplay of emotion, momentum, and volatility that drives markets. While no strategy is foolproof, traders who master this trio can dramatically improve their win rates by learning to wait for confluence and avoiding impulse trades. For instance, a trader might backtest hundreds of setups and see that when RSI divergence occurs alongside MACD confirmation and price-piercing Bollinger extremes, the success rate of binary trades is significantly higher, making it easier to stick to rules under real market pressure. The key is patience and consistency, waiting for signals to align, understanding that markets won't always provide perfect setups, and resisting the temptation to force trades when conditions aren't right. Over time, this approach not only sharpens accuracy, but also strengthens trading psychology, as traders gain confidence knowing they're relying on a structured, multi-layered strategy instead of random entries. Whether you are a beginner, still learning how to use indicators, or an experienced trader looking to refine your system, combining RSI, MACD, and Bollinger Bands provides a complete framework for binary options trading that balances simplicity with effectiveness. And when used with disciplined money management, it can transform your trading from inconsistent guesswork into a calculated strategy with measurable results.